Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phillip Gradwel, chief economist at Chainalysis, to discuss the recent run in crypto assets as it feels like 2017. Phillip, it's great to see you. Welcome to Trade Talks.
Hi, thanks for having me here.
What's driving Bitcoin and Ethereum? Has anything fundamentally changed besides the mass adoption story?
So I actually think the market really changed in mid-March. As financial markets sold off across the board, we saw a really interesting thing in cryptocurrency happen at that point. Essentially, buyers, particularly on North American exchanges, and particularly people who hold for investment, they started buying Bitcoin and other cryptocurrencies in larger numbers almost from that day. So it looks like people piled in to Bitcoin as a safe haven asset. And actually, the story over the last few months has just been the growing demand for safe haven assets as we faced macro uncertainty.
Now, we're well familiar with comparing overvalued stocks to 1999, and does it feel the same? Does the run in Bitcoin and other cryptos feel like 2017?
Well, I guess other than it being November, December and the price rising, it actually feels really different. Back in this time, 3 years ago, there was so much retail hype. It's a much quieter industry at the moment. There's less in the media, but also really the type of buyers are very different. We see the number of people taking over $1 million off exchanges. That's 20% higher this time round than it was in 2017. So people are buying in much larger amounts, and they're actually being quieter about it as well.
Does liquidity and tight supply have anything to do with it? So let's correlate it for the audience a bit here. Companies can split stock to put more supply into the system, right? Does it work the same with crypto assets?
Yeah, so it's actually very different. And I think that's one of the key attractions of Bitcoin. There's only ever going to be 21 million made, and there's been about 18.6 million produced so far. And it's actually the vast majority of that are held by investors. And there's currently only around 3 million that are available liquid for people to buy. And that's actually the lowest level that we've seen since mid-2015. So as all those investors piled in from mid-March, they've really been soaking up that liquid supply. And that's what's causing the prices to spike now. There just aren't that many Bitcoin available to buy, and there aren't going to be any more in the future.
So it almost sounds as if there's a floor in the asset. Is there any way for this to potentially unwind?
So I do think if there's going to be a reduction in macroeconomic uncertainty, then people who bought Bitcoin as that safe haven asset, they might start to sell. It might say follow gold as you get an economic recovery. The other risks are a lot of the investors at the moment, they are holding Bitcoin as part of a broader portfolio. When they see a high price and they've made a great return, they might just sell because they want to make some cash and return it to the people that gave them their funds to manage.
And then are there any targets that you're looking at as far as Chainalysis is concerned, an opinion on where any of these cryptos may go, or is it really based on the global macro backdrop right now?
Well, I mean, not investment advice, but obviously everyone's looking for Bitcoin to breach that $20,000 price level. I don't think it's all though going to be driven by that macro story. We are seeing different use cases actually emerge for cryptocurrencies. For example, Ethereum, it's really become an innovation incubator for new financial service ideas through the rise of decentralized finance. So there are actual use cases that might drive cryptocurrency demand in the future. We're also seeing Bitcoin being used as like a gateway into digital asset investing in fintechs such as Square and indeed PayPal recently. And so I think those trends are going to drive broader adoption beyond just the Bitcoin as a safe haven asset story.
And Phillip, I'm glad you brought that up, because what's different with this particular asset class, it can be used to build out fintech, right? And that's something that any other traditional asset class can't do. The companies behind these stocks can do it, but certainly not the technology itself. And I think that's what the big difference is. I think the rise of DeFi and the more mass adoption we see come out of it, it's very different than any other asset class.
Yeah, absolutely. And just the cycle with which people try things out and learn about what works, is faster than you've ever seen in any other industry. And so while you may not know the particular direction it's going to go, and that generates some volatility, I think as an industry, as an asset class, it's just that innovation and the hard work people put in that's going to drive it up.
All right, Phillip, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.